Gold just hit an all-time high. So should you add it to your portfolio moving into 2024? Let's go ahead and break it down. Gold, it's nice, it's shiny, and it is at an all-time high as of right now. And with people thinking that the economy is not doing well, gold tends to be the place that people like to invest. But is this a time to invest in it, and what do we expect for 2024? I'll tell you this, I'm not the biggest fan of gold. I'm just not. And the reason is, since 1970, the S&P 500, aka the stock market, has averaged 10.43% per year, okay? 10.43% since 1970, from 1970 to 2022, because 2023 is not over yet. Okay. Now, when I compare it to gold of the exact same period, 1970, 2022, gold has only gained 7.7% on average per year. 10 is bigger than 7. Okay, that's number one as to why I'm not the biggest fan of gold when I can just invest in the stock market. Now, yes, you can add a bit of gold to your portfolio just to add a little bit of diversification if you want. My recommendation, if you were a client of mine or something like that, usually, just like I would treat an individual stock, I would say no more than 5%. And if you really believe in gold, which I do not, then you can go up to about 10%, and that's it. Because gold can be a bit risky, it can be a little volatile, it can be a little difficult to handle in more ways than one. So number one, when it comes to difficulty to handle, you do have an option to open what is called a gold IRA. You have a gold IRA and a gold Roth IRA. The rules in terms of the taxation and all that kind of stuff, which you can watch on the channel if you haven't seen it already, they work the exact same way except it's with gold. The problem here is that the fees can be a little expensive. So for example, you can get charged a $100 fee just to open the account and $200 to $250 every single year just for having the account. And the way it works is you'll buy the gold, it gets shipped to a nice fancy facility at Fort Knox or wherever, and they just hold it for you. And that's it. When you say you want to sell it, you call them, they sell it, and you may make or lose money from there. But those fees actually do eat into your returns. Now, if you're investing, $60, $70, $80,000, $200 a year may not feel like a lot, and perhaps it's not, but it is something that adds up that you don't really see inside of regular stock and bond IRAs. It's just not something that's there. But if you're someone who's starting small, right? Let's say you're investing your first $1,000, $250 a year is 25% of your account. You're gonna have to make more than 25% just to break even, and that's not always the best situation. So that's the first thing that can be wrong with gold. Now you do have the option, and again, this is up to you, but there is an option where you can buy a lot of these gold items, gold bars, gold coins, and have them shipped directly to your house. Now the issue there is, number one, you have to have a safe, right? Or I would recommend you have a safe. I don't think you just have a gold bar just sitting in the middle of the living room table, okay? But you do have the option to do that. You can sell it back to the company. Maybe you can sell it to a pawn shop or something like that if you need to cash in that gold. But again, it's not always the most liquid thing, right? You have to ship it, have it insured, and pay for that as well. Like there are shipping costs with gold and insurance costs with gold too. That is something that you do want to consider as you're going through that process. So that's another issue. But I would argue perhaps the biggest issue here is the evaluation process. How do you evaluate gold? Like really think about that. How do you know that this is going to be a good asset other than the fact that it's doing well right now, which it is, okay? And if I'm not mistaken, I think it's been in the stock market in 2023 to this point, but the returns are close, right? But how do you know? I can tell you pretty easily why I think, let's say, a Coca-Cola can be better than a Pepsi from a stock market perspective. I can see the returns. I can see the sales. I can see the customers growing. Gold doesn't have any of that. Gold doesn't pay dividends either, right? And in worst case scenarios, I can say, look, this stock may not be great, but at least it's paying me X amount in dividends every single year. And that is something. Gold does not do that. That's not possible. Gold has no CEO. It has no sales. It's just there, right? And that's not, again, to say gold is terrible. It has no place in your portfolio at all. Again, you can do 5%, right? Again, I have 0 in gold right now, but I really don't think it should be a major portion of your portfolio, given the fees, given the evaluation problem, and the fact that we already know that the stock market just has performed better. I'll also say this, if you are looking for gold, you do want to add it to your portfolio because that's just how you feel, which is fine. There are gold ETFs that track a gold index, which if gold does well, this index does well. There's one very easy and accessible way to invest in it with much lower fees. You have the liquidity factor, so you can buy and sell whenever you choose, and you don't have to worry about shipping costs and holding a physical bar of gold or whatever it is that you may be interested in. So that's one way you can add some diversification if you choose to go that route. But you want to learn more about what's actually going on in the economy and what's pushing people to look for gold, or you're looking for other investments that could do better and help you grow both now and in 2024, then this is the video that you want to check out next.